This is Alan Bush with the Daily Financial Forecast for Tuesday, October 29th. Stock index futures coming under a little pressure this morning. We do have two 9 o'clock reports. That's the October Consumer Confidence Index, guessed at 99.1, and the 9 o'clock September Job Openings and Labor Turnover Survey, guessed at 7.9 million. Moving over to the currencies, the dollar index advancing to new highs for the move, and the greenback is at its highest level since July 10th. Much of the strength is linked to flight to quality buying in light of geopolitical tensions in the Middle East, but also a good portion due to favorable interest rate differentials. So the fundamentals and technicals still appear to be supportive to the dollar, and higher prices are likely. Also, we had news that the German Chamber of Commerce and Industry saying that the German economy will contract by 0.2% this year. This is a reversal to some degree from its previous forecast of stagnation. Also, it is likely that the European Central Bank will be lowering its key interest rate by 25 basis points at its December meeting. And we have the Japanese yen coming under some pressure, falling to its lowest level against the dollar since July 23rd. This prompted verbal intervention from Japan's finance minister. And in the interest rate futures markets, futures at the front of the yield curve holding relatively steady. However, futures at the long end of the curve, namely the 30-year Treasury bond futures, falling to new lows for the move. In fact, the bonds at their lowest levels since July 3rd. Currently, there's a 95% probability that the Fed will be cutting interest rates by 25 basis points at its November 7th policy meeting, 5% chance of no change. So it still looks like futures at the front end of the curve will hold up relatively well, while futures at the long end of the curve, namely the 30-year Treasury bond futures, will continue to come under downside pressure. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.